Hello and welcome to the Savvy Money Show with me, your host, Sean. And tonight we're discussing Delta Airlines versus Carnival Cruise Lines and where to put our money. Please note that this video is for entertainment purposes only. You are not supposed to buy, sell or hold any shares on the basis of any information in this video. I'm not a financial advisor, and please do not invest any money you cannot afford to lose, as the market is very volatile at the moment. So why are we comparing these two stocks when one's an airline and one's cruise line? Well, they appear to be the best out of the two sectors. We won't bother with the dividends because although Carnival is still showing on the sheet 17%, we know they won't pay that. You have Carnival with a PE ratio of 2.6, Delta with PE ratio of 3. So we'll start with Delta. Some people have said about American Airlines, they won't go under because they've got the word American in them. Trump will bail them out. But we don't invest on they may or they may not get a bailout, only on the facts we have in front of us. So American Airlines before the coronavirus was the worst out of a lot of them for a balance sheet. We look at Southwest Airlines. They've reported a 90% drop claiming coronavirus, but all airlines are still ferrying around 5% of the customers and bringing in freight. They're removing some seats and they're bringing in freight such as PPE equipment from other countries. And remember, with airlines, the majority of their expenses are when they're operating. Otherwise, they just furlough their workers. Or sack them if they're out of contract. And they would have made money in the first half of the quarter. It's only the second half. So to have that bigger drop is very worrying. Now, the budget airlines like Spirit, I won't go into because I think after this is all over, there will be a price war in an effort to get customers back as quick as possible. And if we look at the balance sheet, Delta just had the best balance sheet beforehand, and I think it will take them the quickest to get back on their feet. Now, we know Carnival Cruise Lines had a £6 billion debt facility. If Delta had the same debt facility, they would have actually, and tomorrow they both went back to business as usual, Delta would have cleared that debt before Carnival, because they actually make such a big operating profit. Speaking about the debt facility, Delta have been given a £4 billion forgivable loan and a £1.4 billion loan at only 4%. And they're in discussions about being given another loan if needed at a higher rate, or possible equity being transferred. As well as that, Trump has already said to the government that the government should buy up its seats in advance and possibly buy oil for the airlines in advance to prop up the oil industry and the airline industry as a way of vouchers that they pay back over time. So seems to me like Direct Line is doing pretty good when you consider that they have halved their outgoing costs as well. So, and I think once they've halved their outgoing costs and their running costs, once everything is over, they're not going to put those costs back in unless they need to. They may put a third, maybe a quarter of them costs back in, but the more savings they can make, the better. So now we look at Carnival, which has been a roller coaster. Any kind of volatile news changes their share price, as we saw before, with the Saudi fund coming in, and to tell the truth, they probably wanted some diversification in their fund, but we saw that make Carnival jump up from £6 to £12 and then settle around £8. Today, because of the Gilead news, which is why Delta jumped from $22 to $27, the Carnival jumped up to £11.50, and at the time of recording it's at $16.50. Now you have to think to yourself, how far can it go or drop? Because it's risen on positive news, but how positive is that news? But that's time for another video. And with it being so volatile and dependent on the news, any bad news could send it flying right back down again. And you want to look at the costs of the cruise lines. Now, the cruise liners, they refused Trump's offer of declaring under American flag, because they all declare under a foreign flag, including Disney cruises. The reason for this is, if they declare as an American company, they have to pay overtime to their staff for all the time they are on the ship working over their duty time. They have to pay them overtime rate instead of duty rate, and it would cost them more than they would get in bailout. So for the cruise lines, it's more beneficial for them to get a high interest rate. But you have to wonder why Carnival, when they was at a high of $50 a share, didn't do what Tesla did and issue more shares, just to give them more cash on hand in case something like this happened, or to draw down some of the debt. But so they took out £6 billion in debt, 4 of it in 11%, and the rest of it 5%, with convertible loan notes, using their ships as equity against it. So they can't exactly go and get a loan against their ships if they've used their ships as equity already. They may be able to use a few of them, but then if they're in deep financial trouble, a bank may be thinking the ships are only worth that money if they're being used for cruises, or if there's a cruise line to operate them. Otherwise, they just cost money to keep them in dry dock. So, on top of this, Royal Caribbean have announced they're going to start using robots for mooring and for the emergency drills. There's also talk of having wash stations and a guard by the wash stations before they enter the buffet area, of having people serving the buffets on the cruises, which isn't a bad thing, but they're added expenses. When you total these up to the fact that they are already struggling, there are expenses they could do without. They're also saying how they had to order a lot of sea masks, which are basically like surgical masks but designed for sea. Now, there's talk of having scanners so that when you go up through the plank, you socially distance like 2 meters behind each other. They'll say to you, "Hold on a minute, sir." Then you stand there for 5 seconds. It scans you if you have a temperature. They pull you to one side, check you. If not, you go on through. It's not too much of a bother if it's going to protect everyone on board, but it's another added expense. And you may get some people think, "Oh, I'm not going to do that because it's an inconvenience." Now, the big thing is going to be the sea mask. When you go on a cruise, you go on it to get away from what's going on in the real world. Just like when you go to Disney World, you go there because it's the magical kingdom. You don't go there because it's like a Premier Inn. Now, is it going to take a long while for them to pay off the debt? They have to pay it off by 2020, one of them 2022, one of them 2023, which means they've got to hope that the virus is done and dusted and they've given permission by the end of the year, which can really be pushing them. Now, the biggest hope is for a cure rather than a vaccine, purely because you can't force people to take a vaccine if they don't want to. The other thing is, if there's a cure, they can have them on board. If someone gets sick, they can give them the cure. And that's a solution for them. However, with a sudden surge in price, I just think Delta is the best bet. I've looked into all aspects, such as if it comes down to brass tacks and this coronavirus, we have second wave and mutates, which is already mutated 4,000 times, and it keeps on going, then they can always use their ships as hospital ships. Looked into with Delta, they can use their ships as freight, and parcels are on the up, and as you know, and letters are on the down when it comes to delivery services. Now, but when I get down to brass tacks, still believe Delta is in a much better position than Carnival. That being said, there are much better, in my opinion, there are much better opportunities out there still. For instance, I went into Simon Property Group, which is a REIT which deals with malls in America. They've just opened 43% of their malls. Now, if you think that their states are reopening, and REITs have to, by law, give 90% of their income back to their shareholders, and Simon Property Group was over $100. Now it's a 60. It's the same amount of drop, but it's coming back a lot quicker, and it gives much better dividend quicker. I also looked at a couple of REITs that specialise in healthcare devices that have dropped because it's a REIT and everyone was just getting rid of REITs. Difference is, all the healthcare premises were still staying open. So the hospitals were staying open, doctors were staying open, the biotech labs were staying open because they're working on the coronavirus. So they haven't lost money, or very little. So it's another thing there. But if you want to take a punt on Delta or Carnival Cruise Lines, Carnival Cruise Lines, there's more upside. It's more like a roulette wheel. But Delta, you still have the upside. It's more of a sure thing, in my opinion, because they're not saddled with debt. Anyway, as I said, please do your own due diligence. I do not believe it when people just take advice from a stranger and then go in and put money on a stock. Listen, when everyone was telling me that Alphabet and Facebook were losing money because no one was advertising with them, I did my due diligence of all the FANG stocks. I knew they were going to report, so I took a small position on them. The instant they reported, they shot up. I sold it and moved it to something else. So please, just because other people tell you something doesn't mean they're right. Do your due diligence. Thank you. Good evening and good investing. Goodbye.